This chart shows a common, frustrating scenario. The blue line represents a company's earnings growing steadily, but when you buy the stock, the price, the red line, plummets the very next day. Fundamental analysis identifies a quality company, but it offers no data on the entry price. Even a resilient business becomes a losing trade if you buy at a temporary peak. Technical analysis uses price and volume data to identify repeating patterns, turning hundreds of individual data points into a readable directional map. Certain patterns are reliable enough to influence institutional money. There is a specific signal, known as the Golden Cross, that has historically preceded sustained shifts in the Nifty 50. Learning to read this data moves you away from guessing. You begin to identify the specific moments when the market is ready to move. The candlestick summarizes 4 data points over a period. Its thick body spans the distance between the open and close, while wicks show the high and low. Green indicates buyers pushed the price up. Red indicates sellers drove it down. When these sessions are charted over months, price floors and ceilings begin to emerge. Traders refer to these as support and resistance. They form because participants remember previous turning points and tend to execute orders at those same levels again. When the price eventually breaks through a support floor, the roles usually reverse. That old floor becomes a new resistance ceiling, preventing the price from rising back above it. These levels track the exact price points where large groups of traders have previously committed capital, creating predictable zones of supply and demand. Before applying specific tools, you must identify the overall trend. Is the stock making higher highs or lower lows? The most effective approach is to always trade in the direction of that primary movement. To find direction amidst volatility, traders use moving averages. This tool averages closing prices to filter out panic. When a short-term moving average crosses above a long-term one, creating a golden cross, it indicates recent buying momentum is overtaking the historical average. To measure the intensity of that move, we use the Relative Strength Index, or RSI. It identifies when a stock is overbought and likely due for a pullback, or oversold, meaning the selling pressure may be exhausted. Indicators are not standalone predictors. They are used to confirm or question what the primary price trend is already showing you. In India, these technical patterns are most reliable on high liquidity indices like the Nifty 50 and Bank Nifty. The massive volume of institutional trading ensures that these chart levels are respected. However, external catalysts override technical data. Events like the union budget or earnings reports create volatility windows where historical price patterns can break instantly. This animation shows the role of volume in confirming price action. When a stock breaks through a resistance ceiling, a synchronized spike in the volume bars indicates that high conviction buying is driving the move. If the price moves higher but volume remains low, the breakout lacks institutional support. High volume is the necessary confirmation required before committing to a trade. A common mistake for beginners is crowding a chart with too many indicators. This leads to analysis paralysis, where conflicting signals make it impossible to take action. Successful traders don't choose between fundamental and technical analysis. They use them in a specific sequence. Use fundamentals to build a watch list of high-quality companies. Then use technical analysis to wait for the specific price levels that offer a high probability entry. You can start by opening any Nifty 50 chart and practicing the basics. Ignore the complex oscillators for now and simply look for established support, resistance, and volume spikes. Technical analysis provides the framework to manage your risk and time your entries with precision. To explore advanced patterns and use our specialized calculators, visit mithinsrivasta.com.